Happy Friday, everyone. I hope you guys have had a great week. We are already heading into the end of October holiday festivities. It seems there is fall stuff everywhere. And my son is staking out the coolest upcoming trick-or-treat locations. I actually saw some stuff the other day for New Year's decorations. I'm like, yeah, that is definitely get a little bit ahead of ourselves here. You guys got your New Year's decorations up yet? No, nobody? What are you doing? Slackers? So I'm kind of managing a trade here as we're just getting started. We had a 2T on the NASDAQ. It's actually just coming into the main target level that I'm looking for just as the scalp. I'll show that to you guys here just to get started because League of Traders, we've been focusing a lot on these 2Ts and 2Bs here. So here's what we're looking at. We've been in this crazy uptrend here all morning, straight on up. On a 60-minute, this just looks like this, zoom. So when you're dealing with a market like that, reversal patterns are high risk. So what I wait for is something like this, where I start to get the confirmation of these downside flushes and then that shifting happening. So by waiting for that, I'm not going to get stuck shorting at just because it's a measured impulse move, retest. I'm not going to get stuck on those false reversals by waiting for the momentum to shift. And I didn't even wait for this momentum to shift. I waited for this extra flush and then this one here. This is a 1 minute time frame. And I'm going to actually go down to a smaller chart. Well, I'm going to show you different charts here. So here's our 120-minute zoom straight up to the 123.6 of that first correction. So we were at the resistance zone here. It went a little bit above that exact level, but it doesn't look like much when you're on a 120-minute chart. Here's the 20,000 tick chart. So you can see here, again, really strong momentum on this impulse move. We've seen bigger impulse moves, so that's not really favoring reversals and corrections. It's just coming down to the smaller intraday stuff that gives us some of the scalp moves. And I didn't hold the entire position for my target down here. Basically what I was looking for was that's like kind of most of what I was hoping for was, let me grab my, where's my trend tool? Here we go. So if I put the trend tool on here, what we tend to see is that even if this goes and pops back up, it can come back down to this lower zone here as long as that momentum is pretty decent. But you don't know that when you take the setup up there. So the setup that I took was there was a little bitty 2T in here with the extra blurb on it. So I shorted that blurb right there. Took off my partials right in here as we were coming into this zone of support. This is our fib fan again. And then I had the order on the books for coming into here. So I actually got filled here a second ago. So this might, still turn around and give a better correction on the larger time frame, but based upon what is going on with the momentum, risk is higher to try to go for more. So I'm just gonna kind of take my money and run in a situation like this. Here's what it's looking like on the 2 minute time frame. So yeah, these can pull back. You can pull back to like the 23.6% retracement. Let me put those retracement levels on here, which should be around 80.11, 80.12. So that's going to be like the next main support, but we could get like a little base or an avalanche or something before that could get there. So that's kind of where like a bigger aim would be here this afternoon as we go into the early afternoon, but I took the cautious approach myself here this morning. Let me pull up my execution for you. So I shorted at 80, whoops, I scrolled. 80.3875. So right there. Right there is where I got my fill. So when this was coming back up into here, I actually had hit the sell bid. So that's how I got my fill, but there was a little bit of slippage because a little bit faster. Getting a little bit of shifting here as it's coming down to that previous low zone. Like I said, this does have room to fall even further, but you might get a little bit of a correction in here. The kind of conservative outlook was to go for that lower trend channel that I just showed you guys earlier right here. That's the conservative view. And when you get these back and forth, then that's a pretty good level, because if it's going to go for like a momentum reversal or even a momentum reversal plus, that's the level that's going to hold. So what happens is that as it's coming into that zone, you want to watch the momentum. I was starting class here, so I wasn't watching the momentum, but when the momentum goes sharper into the support, there's a better chance it's going to push through it, which is what we're seeing now. If on the other hand, this had slowed, so you'd seen this slowing, but the low here might have been at that Fibonacci level, or not the Fib level, but the trend channel level, then it would have been more likely to have held and popped back up. So good little lesson here just on our reversals. And again, check out that momentum on that upside here on the larger time frames. So that's kind of what we're working against here. It is fighting against it. It just has decent smaller trend placement. So this is actually still going. I think it's going to go get to that level. Where is it? Here we go. It's getting there. Trying. And then I would expect that zone to give us a bounce at that point. Let me see here. We've had like a zillion 2Ts and 2Bs this week on some of the larger time frames because so many things have been hitting some of the more major support and resistance levels. Oil yesterday was a great example. I'm just going to do a brief run through on that, and then we're going to go look at what we can see in the market in the weeks ahead. So yeah, in League of Traders this week, what we've been talking about is the momentum reversal plus. So what I'm going to share with you here is one of the perfect examples that we had for the momentum reversal plus. Well, this one was a momentum reversal 2T in oil yesterday. It's just a variation. So those of you that are new and you're not used to some of the more advanced strategies, this is one of them. I'm going to come all the way back up here to where it was first getting started. So here's what we're looking at. Kind of go right up here. All right, so here's our first chart. So a momentum reversal 2T, for you guys that missed class yesterday, it's halfway between a momentum reversal and a momentum reversal plus, and it kind of leaves out the middle portion. So what we see is when it tries to go up for that third high, it just doesn't make it, goes into congestion, and then goes for another high. So you get basically a 2T in this portion, and that's what triggers your short. So here's where I shorted. What I did was I used our second chance entry that I've taught you guys in class over the last couple of months. Basically, that previous high, I put my order on the books right at it. So I got filled one tick from that high there. So here's what we get as kind of continuations. You can see the nice two-wave move for that second chance entry there. Here is that first move right into our S2 support from our 2T. And then we had another second chance entry here. Measured move, but things are starting to pick up momentum on larger time frames. Gold was forming a 2T2, so I notified that. Then here's our oil continuation. So see how that's gaining momentum there on the 2-minute chart? Comes into the support here. So this was the main support kind of that you look for with this pattern. It did react off of that and head lower even later, but that's kind of your main support zone. Here's gold. Gold was forming that 2T. Here's the reaction off the support. So you guys can go back and review this to get a little bit more knowledge in your noggin. So here's for support on gold. There's the second chance entry circled on gold. A lot of times I'm using the second chance entries. And then when you go back through your video here today, you can do a screenshot of this, and that'll kind of explain what this pattern is. It's called a Momo 2T. I'll show you kind of the longer follow through. So here's what we had going on gold, the second move into support. These are all alerted in the League of Traders. And here's what we had after hours with oil, kind of still following up with the continuation after a two-wave correction. So this is just a really good example of a core short strategy that you will see me use in basically all of my trading. And what we just had happening on the MNQ and the NQ, exact same thing. I have both charts up here in front of me. So you'll see exact same thing. We've started doing more of the micro trading in gold in League of Traders too. So for those of you that are newer to futures and working on executions, you'll start to see some of the examples on micro gold. It's basically just a contract that's a tenth the size of gold, just the same as our micro E-minis, index futures. So I use that example here too. Here's gold this morning. So what's interesting on gold, I'm gonna have to pull up a larger time frame on this on gold. Show you guys where we're at in the overall market. By the way, it's forming a megaphone right now on a 200 tick chart at the lows. So I'm going to grab gold on a larger time frame so we can look at the larger outlook on this. Grab a couple charts here for you guys actually. Because when you're going into these reversal strategies, it's really important to pay attention to the larger trend placement. That's going to tell you, is it something that I can hold for an hour, a day, a couple weeks, or do I have to just be kind of in and out? I'm also going to grab the oil charts while I'm at it. So you guys can see kind of the details of where we are on oil as well. Just 1 second. I'm just moving them over from my trading computer here. Okay, so here's gold this morning, and gold has been really strong throughout the morning, which was, pretty interesting. And then, as the market took over the strength department, then gold fell. What you can see here on my 1 minute time frame is that I lined up my 61.8% Fibonacci fan with that first pivot. And what that does is that gives me that support for the next pivot trade. It tells me where the market is most likely to react next. And then here it was trying to do a Phoenix, but it couldn't get off of that. And it actually ended up breaking it. It's just what patterns we were looking at in class. So here this turned out, and when that hit the third time there, that broke, and that actually triggered a short. So if you're on the long side, this is where you can adjust your stops, because that signifies the failure of the pattern. So the fans are really a great thing to use. So here's where we're at on the larger time frame. So when we're looking at gold, you're coming up into these previous highs, but it's really part of a breakout here too. So reversal strategies at this level, kind of on the more iffy side, because you do have a greater chance that, they can still pop up, they can still reverse back higher. So then you want to focus mostly on the smaller time frames. Here's oil on the daily charts, you guys. So what we've seen on oil is it's kind of acting like it's an inverse head and shoulders. Even though the lows are pretty darn close and this head is only slightly lower, it's still trying to hold more of that rounded off feeling. And that's why we're getting a little bit more strength coming over here on the daily charts. So this has led to some upside. Whether it's going to be able to sustain it or not is going to be tricky, because overall here, this is still more downside. So it's going to be a little bit on the trickier side. Just stick to more of the intraday time frame still on it. Here's the 240 minute. Here's where that strategy was yesterday, last night. Well, going into the end of the day yesterday. So on gold and oil, both of those, because of their trend placement, I'm really cautious against holding them as like more of a position trade right now, or a swing trade. Really just focusing more on the intraday timeframes. The hard thing with forward focus on Fridays is that when we get things that are setting up for a swing trade, they usually happen one to 2 days a week is where you get your core main support or resistance levels that end up with the pivots. So, Fridays, we only got like a 1 in 5 chance of it happening to be that zone or that day. And that's not even, well, actually maybe 1 in 10, because you got your trend moves can be up to, a 10-day move. So when we're looking at larger time frames, we aren't always getting to a point where we're going to get those larger swing trade setups happening. But if you know where you are in that bigger picture, you can get a feel for about how long it's going to be before you might get another setup taking place. So for example, one of the things that you can look for are the shorter corrective moves. We usually refer to these as kneecap type of moves. That's usually what's going to bring you into a support level where you can get a trigger on something. And then you'll get the bigger corrections like this here. This is the congestion that's stalled oil right now. And those can help lead you into even bigger moves. So sometimes you'll get the smaller two corrections will look like this. And those together will be the same amount of time as your main core congestion too. So that's an interesting thing to watch for. So that means, this is at a zone. It could go pick up momentum technically, but it could also base out a little bit longer. Try again there. If it doesn't go there, then what you'll usually see is about double. So you can kind of think double, double, double. So your first congestion zone, if it doesn't go at that point, double it. That's the next point that you have the greatest probability of it going. If it doesn't go at that point, double that whole thing again. That's the next point that it's most likely to go. So that helps you with timing on your trades, so that if you see strategies that are setting up at those points in time, you're going to have a higher likelihood of success. If it happens anywhere in between, your odds are greater that it's a false breakout, and it could be a trap. It could be like a reversal pattern, like a 2T or 2B, and it just might not go as far. So keep that in mind when you're looking at your swing trades and you're looking at your daily or the 240-minute chart. That's going to help put everything into context a little bit better. So here on our NASDAQ, we don't really have much going on here. So here you can see the strategy that I showed you a little bit more closely here. So it offered up the short here with this extra little flush. Usually what you're looking for is you're looking for this measured move. In this case, it hadn't quite put in a higher high. So I waited to see a flush move and then shorted the bounce. So that's kind of an advanced entry trigger there. Gives us a little bit better odds of success on the trade. I'm gonna go pull up our daily chart on this. So what we are seeing happening on the daily chart of the NASDAQ is exactly what we've talked about over the last month, where this still had the potential to pull up for that third high, and it started to gain momentum again over here. So that helped get this extra little push going on. When we look at the smaller time frame, like the 240-minute chart, I need to add some more days on here. But when we look at this time frame chart, what we've been looking at are different ways that this could create reversal patterns or correction patterns at the highs here. Because it was coming into resistance from this previous high. And so at this zone, it could have done something like the momentum reversal plus. In this case, it's opting more for trying to go for like a steep 2T, which also could then go into a bigger momentum reversal as well. So right now, the way that the momentum is playing out here, it can still offer a reversal at this point, but what will usually happen is because of this momentum, it can have that extra flush to the upside before it turns around, can start off with a slower turn and then try to gain momentum, or it can go into, if it does like comparable momentum here, it can go in and give you that momentum reversal over there and kind of turn it over at that point. I'm kind of opting for the flush and then the turnover, which could go into a head and shoulders doing that. So can get into more of like a head and shoulders pattern. That's more what I'm going to be watching for. That's going to be the core pattern I'm going to be watching as we go into next week. So we'll see if we get that, but that's what I would like to see at this point. It's a really good level for it to happen, and I think there's pretty good potential there for it to occur too. Do a screenshot of this and post this in our channel. That way you guys can go back and see what happens. That megaphone on gold is trying to do kind of like the equivalent of a momentum reversal plus. It's just struggling because of the strength on the downside today. While the NASDAQ has flown, gold selling has been really sharp. All right, so I'll post this into our room here. Oops. You guys can go take a look at that. All right, so other markets. A failed trade deal would solidify that in mid-November. Yes, it would. That is actually good timing for getting more selling coming in. So we'll have to see how the news plays out. There's so much going on that's kind of like can be a really major market mover, but it's all been kind of teased. So it that teasing is basically part of why we've got all of this chop up here in the first place. I mean, trend placement wise on much larger time frames, it was already at a good level for it to happen. As we've seen, when we've gone and done our sessions where we're looking at the larger time frames, like the weekly, monthly, and yearly charts, we're definitely at good levels for bigger corrections to take place, whether it's a correction through time or price or a bit of both. But definitely the news environment can help with that too. And it's kind of interesting. So it's like you're coming into that point where it's already ready for that to happen. And then you happen to have a new situation that can easily impact it as well. Yet the markets were already indicating that that could come into place for a couple of years now, and we've already started to see a number of securities kind of turn over. Let me show you guys the bigger time frames here, monthly. And this was back in, I mean, really started 2008. So it's kind of interesting that that is corresponding with all of like the trade wars and all of that fun stuff in here, because it's like the market was already ready to do it in the first place. Let's see here. I am going to pull up some of our other markets now. Just gonna flip on over here. If there's something you want me to take a look at, by all means, post it and let me know. We'll pull it up. We'll start with some of our Forex pairs here. Got some crazy fibs on here I don't need anymore. So what we've been seeing with the euro dollar, of course, is that it is still doing that crazy congestion where it's just not sure which way it wants to go coming out of this congestion. Couldn't break at the do or die point on the downside. So now it's trying to flip and shift momentum to pull up on the upside. But as you can see on the intraday charts, it's really not having the best time with that. So on the daily charts, here is what we are seeing. Clear this. We've got right about a 50% retracement coming off of that low. I know my lines are a little bit light. About a 50% retracement, but it's coming off of it pretty strongly. So what we would need to see to be able to hold this up is it would kind of need to hold this zone. So if it holds that zone, we can get things like this that can form a phoenix and bring it back up. So that's kind of what I'm looking at here on the Eurodollar in order to bring in more strength kind of into next month, next 2 months, end of the year. We're right about kind of like mid-move here. So there's nothing here for, executable trades. When it comes down into here, we might get some intraday pivot type of moves. So be worth watching for that over the next week. I'll show you what this looks like here on the 60-minute. It's not really anything here. I mean, so what we're looking at for, support-wise, you got some support there. That's going to be kind of a measured move. But this has more of the shallow avalanche vibe to it where it starts out slowly. So this can actually plunge through that. So there's no guarantee that you're going to get much reaction off of that level here, just because of the way the momentum shifted coming off of this high intraday. Aussie dollar basically trades, along with it. So you've got a lot of the same risks. It does have a clear two-wave correction here on the 60-minute chart into the support zone over here. And then a nice 2B here. So this is a great intraday buy because you've got two waves down. You got your two-wave correction. You got another two waves down. And even though the momentum picked up there, it popped fast. So by popping fast, pulling gradually back down into the support, that allowed it to pop back up into that resistance here intraday. So it gave a good level where you see that nice intraday play here. But when we look at placement on larger time frames, like our daily chart, things are kind of more iffy. We have this downtrend channel. We've got a W trying to form, so that W can pick up speed, but we need to see how it reacts here. Because usually when that W picks up speed, it would go with this being more of a kneecap, not more of a phoenix. So if it went out longer with a phoenix, because it already has this W, that can be a little bit more difficult to get going. So we'll see, but right now, nothing really actionable here. We had, the nice retest of the high there to get that intraday pivot, but there's no location here for a great pivot other than just the intraday where it's doing the retest of this high here. So just little kind of baby support here. Larger time frames, I'll show you that quick. Those weren't here last week. They're just kind of scooting along, and the thing with this type of move is that it's not highly predictable because this channel could break, soar fast, or it could just kind of keep going la 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 la, and then eventually do it. And actually, if you take a look at oil on, let's see, the downside last night or the upside this morning on I'd say maybe a 50 tick chart or a 100 tick chart. Those are good examples of that. Let me grab this and kind of show it to you here quick. I'll show you one of these. So they'll usually end up doing the pivots off of support or resistance, but they don't necessarily give you a good pattern to trade. They'll just go and pivot. See, like that. So you can watch for support levels like Fibonacci levels and things like that, but it can be a little bit harder to get into these trades properly. If you wait for that spike and then buy the pullback, your odds are so much better. You don't always get the pullback, but if it spikes, stronger momentum, comes back down, that's going to be a better spot for you, safer spot. You can see the same thing over here. See, da 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 da, spike, pullback, buy the pullback. Then you're more likely to have that work out. Question from Harvey. Can I explain the momentum on this? Yes, so what we have here, this is a pretty classic type of move in the markets where it goes and gains momentum. We saw this in things like the Bitcoin, for example. What happens is things can start slowly. This is where momentum reversal is higher risk at lows. Here would be where your momentum reversal plus would be, but it comes off a downtrend. So you're actually seeing a tilted phoenix here. So this is your first wave up, you got your second main wave up, and your third leg up. So when things are gaining momentum, you have a better chance of a V pivot off of the higher low. So what I look for on these is like a little tiny reversal pattern, or look for that retest second chance entry to go short, where you see that first spike to the downside. Sometimes that second chance entry won't pull all the way back up to the high. So for example, it might go like this, and then might just do like a two-wave move like that, and then that's your second chance opportunity. Let me actually, I never trade Bitcoin, but let's see this here. Get this on here. You can see this on the daily chart. That's exactly what happened on the daily chart. So see that? It's the same kind of slower start, picks up momentum, flushes hard. So in this case, it does a two-wave move, and that's your short. So like I said, same thing has happened on the Bitcoin. So when things start off more gradually, go and spike, basically you get so many people piling on there and they're just like, oh, it's going to keep going. It's going to keep going. And then bam, crashes. Let me see if I can think of a couple of other recent examples for you. Roku is another good one. So same thing happened. This is what helps me predict the high in the NASDAQ back in 2000, the same situation. It wasn't like rocket science for me. I just had a feel for what I had seen a lot of internet bubble stocks do and tech stocks back at that time, back in the late 1990s. So that prepared me for not getting like a bias that, oh, it's just going to keep going. And it basically did the exact same type of thing here. So in this case, we didn't get a good retest here. We kind of had just a little kneecap type of move. Let me look at this on an intraday chart. Sometimes you can see it on an intraday chart that you don't see on the other time frames. Oh, it's not letting me go back further. Why aren't you letting me go back further? That's not cool, man. So this might have had that little extra spike there. I can't really tell. It kind of depends on how it moved in this section here. If it flushed down, it might have had that two-way move back up there to that slightly higher high. I don't trade on this computer, so I need to actually go and maybe reinstall and put in the new TradeStation version on this. I know I tell you guys this from time to time, but I just keep forgetting to do it. I actually should just flip it over and do it on my other newer laptop. All right, so got a couple questions here on some other markets. So let's go look at some of those here quick. We're going to look at the pound Swiss. That is a nice 2B there on the monthly time frame. Kind of see it on the weekly here. So this is your 2B strategy. And it gets a little tricky on the entry on this one because the momentum was so strong as it went down, retested this low and kind of went to the lower low over here. So entry trigger on that's a little bit tricky. You just kind of have to take that channel break and maybe use the intraday charts for you. Then comes up, goes into Phoenix, a little bit of an early break on this. So this is kind of looking like we could get more momentum coming in. I would like to see it do more like kneecap to bring in more momentum. It definitely has room for a third leg up. It's just added do or die point here for that to happen. So let's see the intraday chart. Got anything quite yet on it? Okay, so intraday chart here, what we have is the momentum reversal. We kind of talked about this the other day in some of these. Then it came up, it did the momentum reversal plus zone, but it's not really getting going and turned over on that momentum reversal plus. So it's kind of trying to shift momentum again. So that's what could bring in that additional spike. So I think that that's a possibility here on the pound Swiss. Let's go see what the dollar Swiss is looking like. I mean, that looks like that could keep going too. So it's kind of treating it like a shifted Phoenix, tilted Phoenix. So it looks like it wants to head back up into that zone. So selling's coming in here again, you guys, on the futures market. Gold is still holding that support, just not getting off of it yet. Oops, I hit the wrong one. There we go. So the dollar Swiss on the daily chart is doing the same thing that we just saw, where it has like that momentum reversal and kind of potential for the plus, but it's coming off of a downtrend as first wave up. So more likely that it could fail and actually end up pulling higher. The weekly and the monthly charts, this is where we've been into so much trouble with the dollar Swiss. It just isn't going anywhere. It's just been stuck in this range for ages. When it does break, you're going to get back to these more rapid swings again. Whoops. It just needs to break first to get those pivot moves coming back in. Hold on, guys. I want to double check something on gold here. It's a good zone for reaction still off of this support. Got 3 legs down on the 2000 tick chart. It's kind of rolling over nicely here at the lows. We'll probably continue to see a reaction off of this support as we go into the early afternoon here. Let me grab that chart and kind of show you what I'm looking at. I'll show you that wedge 2 that I mentioned earlier, megaphone rather. It's a really good intermediate support level. So here's where we are at on gold. So here's the megaphone that I mentioned earlier, and then it kind of went into little bitty to be here. And then it's at all of this support, had 3 main legs down for the trend exhaustion, so good zone to get reactions off of. It's kind of a little bit on the gradual side compared to the upside. They're about the same, so that also helps with getting some bounce action here. But it also means that since this is halfway on this move up, that this can still go and then break lower after it reacts here. All right, let's see what else we got going on here. I've got some questions on some individual stocks. Hold on a second. ABBV. Nice gap closure there. Here's, you can see on the weekly again, that spike down and then the spike back up. So this is what I'm talking about with the retest. So that's what ABBV did as well. And it put in that measured move on the weekly. Right now, you've got a nice two-wave, like a correction here. And what we're going to be looking at is, continuing to show us support at this level. On the intraday charts, just a little bit of minor support. Open this more. So what often happens with ABVV type of patterns, this type of thing, is that it can go into a two-wave correction and then go lower again. That two-wave correction can develop into bigger two-wave correction that can go lower. So I do think that this daily time frame has some more room for downside, even though it already has the two-wave support here. It will usually bounce a little bit faster if this goes and does like a slightly lower low like this, because you can see the momentum shifted here when it hit the two waves down. This is a 60-minute. So if it goes to that slightly lower low, that's actually can be a buy signal for an intraday trade. That can help hold up the momentum. So we really need to see how this reacts off of this low. Generally speaking, if it's more of a pivot type of move, you're going to get your two waves and then you're going to get more downside. If it rounds off to start with, like for example, goes to that lower low, then it can get some stronger spikes. So the momentum can be stronger on the upside. Verizon, nice 2T there on the daily chart and also the intraday. So you've got kind of the combo trade here. So you have your 2T here, and here's the second portion of that. So here's your trigger for that 2T, and then it goes and does the secondary setup right here, and then the confirmation of the break. So that's actually a reversal pattern in there. It has hit the main target level. Pull this up here. Oops. Intraday, or weekly. Wedge. Our monthly still looks pretty much like it can take over with the bulls. It just needs a little more time. I mean, even like this can base out longer and go. But you're dealing with this being more of a Phoenix type of move than anything else. So, I mean, I'm still looking for this as a good hold for longer term. I know some of you are holding it for dividends and things like that, and it still looks pretty good longer term. I wouldn't be surprised if it, chops around in here, but longer term still looks to be decent. Again, short term, it had that nice 2T this week. So that's a great pattern, especially when it has a 2T within a 2T. So like when you get your first two moves, and that's how most of my trades have been this week, they'll have the first big one, and then you can get a smaller one. So you can even have this be a smaller one within an even bigger one here too. So that's a great way to look at those strategies. Tesla. Interesting thing, my one of my best friends' husbands just got a job offer in California for them. They're like, hey, we can get a Tesla now. I'm like, oh, okay. So pretty crazy spike here coming off this Phoenix. I think I would just stick to day trades on this one though. Tesla is one of those things you can't really know what's going to happen overnight, and it's very jumpy overnight. It can be very jumpy overnight. So I would just stick to some intraday trades on this. And this is a good example of how to trade a gap play though. So if we look at Tesla here on the 15-minute time frame, the gap itself is really big, much bigger than twice an average day's range, which means that that first day often has a harder time really continuing in the direction of the trend. But if it is a breakout on a bigger time frame, in this case, it's triggering a phoenix on a weekly chart, then it can still keep going, just might not do it that first day. So what you watch for is just this core V pattern. So what it does is it kind of looks like a check mark. It has the downside move, the upside move, and then the sides. And then when that side breaks, that's your trigger. Now what this did here, where it gave the false start, pulled back in, and then went, that's normal. Let me put this on a smaller time frame so you can even see that better. So see how this popped up, kind of triggered the breakout at the end of the day? And then flush down. A lot of times the flush might be even more because these bars are almost exactly overlapping. I call this blocky trading. And so when you have the blocky trading, you'll get breakouts and then it can flush and then go. And the flush basically tries to take out as many people as it can and then goes. So when you're trading a breakout like that, keep a wider stop. You know, you might not actually have to take that stop, but keep it wider so that when it flushes, you have better management over the trade. And that might mean you have to have smaller size to start with getting into the trade and then build into it. After the flush happens, then you can build into the trade and look for a longer trade. But this is a really nice example of a very typical gap play where you get the continuation, just not the day of the gap. And it usually happens when you have a breakout that's like on Tesla, where it's breaking out of that bigger, longer weekly range and not just a play based upon the daily chart alone. It's a much larger time frame play. Yeah, Amazon, let me scroll this. So Amazon, of course, killed the NASDAQ after hours. Boom, straight down. But NASDAQ's another good example of a gap play. The gap was, pretty extreme, and it was right into a support level. So this had the immediate move up. Then on the intraday charts, you got some movement on the upside. Let's see what this is. Kind of widen this up here. This is what we call a second chance entry on a pivot. So it's retesting it. You had a nice two-wave move up, comes down. This is something where the way this is forming is actually more prone to going lower. So even though it's kind of pulling up here with the two-wave move here and the stronger drop here, this is something that you'd be more likely to see a breakdown overall. So more likely that it would be a tilted avalanche and kind of pull back down to this zone in here. The kind of do or die point for it would be when it gets to the lower channel. So that's what I would be kind of leaning towards on Amazon. That would mean like the plays like this to the upside, like as the gap zone closes, that's going to trigger intraday reversals. So you can enter the short side trades based on intraday trades, so you can protect some of your gains based on just like intraday strategies. And that leaves you with a little bit to work with to hold for a longer term strategy without really giving you much risk on it. TSM. This is tricky again because it's that just steady push, and until you get the flush and the retest, it's hard to determine what's going to hold. We see that flush here on the daily chart, so we're at a retest right here. So this is trying to give us some reversal on some intraday action. But as far as that goes on the weekly time frame, we don't have a flush showing up there yet. So it's not as important as a flush as it would be on the weekly chart. So if it gets a flush on the weekly, goes back, retests that high, then that's kind of easier to turn back around. So I think you're coming at a good resistance level, but there's still room to play here at this zone. See how the momentum picks up into this high compared to over here? So that can open this up to do things like this. It can do like another 2T here, and that can start to shift the momentum a little bit better. So right now I'm just not seeing anything on this that I would consider actionable. I think it could go into correction yet, but there's not really a main trigger for it. The only thing that kind of would be a concern is that it did this little flush here and then crept back up. So just kind of look at how it reacts off of that level. JNUG, nice little pennant with the double bottom on the intraday chart. Three-wave exhaustion on the upside, gap closure. So this should continue to hold this high here for a few days as we go into next week, probably go into congestion next week. If this hadn't gone, so quickly into this gap closure, a lot of times what we see with this pattern here is it'll pull up a little bit further and then it can come back down and do another test of support before bouncing again. So kind of pull it back down into like, 50, 48 zone before you would get a bounce again. So it might still do that on a smaller scale, but I would expect that the way this is reacting off of this high, this zone should hold as we go into next week. My guess would be the rest of the day would be pretty flat. Maybe a little bit of downside, but overall pretty flat because it has the gap closure, so it kind of hit its goal. So could easily just hold 61 into the end of the day. Shack. I always keep thinking Shackley or the vitamin company whenever I hear SHAK. That was a nice break down there with that double top and the pullback in here. Let's see. So again, this is one of those things where, again, if you get that flush, then your retest of highs is your short signal, and that can lead to the bigger short on the downside. The next support is really here. I mean, so this could easily keep going into that zone. See what our retracement level is. I swear I keep hearing thunder, you guys, and there's not a cloud in the sky, but it is really windy out. Yeah, the 38.2, 50%, those are going to be the levels to watch. Might react off that 38.2. What I don't like about trying to do a reversal on something like this is because it tried to gain momentum here. So with that influx of momentum, it can pick that momentum up still. So it can do this avalanche and then go into like a 1, 2, 3 and still keep that momentum going. So it makes it dangerous for somebody coming in to try a reversal. Even when you get a reversal set up on the intraday charts, it still has that extra risk to it. This was a little bit of a megaphone down there. When something holds a low like this, what you will usually see is because it hits it fast, if it tries to bounce, it'll come up, maybe do something that looks like a little phoenix, hold there, maybe go into like some chop, like a tilted phoenix again, and then gain momentum. So it will start more gradually and then build up, which also makes it more tricky when you're looking for a reversal off of support because it doesn't it's very rare that it would start to go really quickly, that it would turn around like rapidly. The ones that shift momentum into the lows, those are the ones that are more likely to spike on you. Aha, thank you, Mark. I will play around with that. All right, you guys, that is it from me for today. So I'm going to head on out. Have a wonderful and safe weekend, and I'll see you guys over in the forum. Let me go ahead and save our session here.